All right, you're dialed in into the profitable buying and selling stock series, and then what we got today is we want to talk about Intel. We actually talked about in the last video, and I feel like the turnaround is really good. The narrative with AI is going really good for compute power, and so I've added some to the portfolio, and we can take a look at that in greater detail in a sec. The other one I've added just a little bit, and more so, I actually should have bought it a little bit more when it was relatively lower, is Supermicro. Now, Supermicro is a tricky company because they've had some issues with export controls where some of the employees and contractors recently in 2026 got busted for smuggling AI chips, NVIDIA AI chips, into China, and then they had their accounting and governance crisis in 2024 when they were starting to take off. The stock was blowing up because of AI, and they're building server racks and having their cooling systems, and they were one of the hottest stocks, and everything got screwed over because of a short seller pointed out some issues with their accounting irregularities and activities. And so anyways, that was finally got sorted out, but by then this stock lost its luster and basically fizzled out, and because of all these issues. And there's even more issues before that. There's like in 2020 there's SEC fines for I think accounting violations for improperly recognizing certain revenue and stuff like that, and there was even more previous to that. So basically it doesn't have a good track record. And so a lot of companies, companies and investor institutions may stay away from it and not recommend it, and analysts might not, like the tier one analysts might not cover it. But AI is hot. Their recent quarter revenue did really well. Their margins are, I think, decent for the business that they're in, and so I would add more when it's maybe if there's a better price. But I just put a little bit in the portfolio right now to say that we have it in the portfolio, not a lot. And let's look at the portfolio. So yeah, it's May 27, and here's the portfolio, and these are the positions here in this window here. So yeah, we just added Supermicro, only 200 shares, so that's not a lot. That's worth like 7K. Intel, we added 200 shares, 23K, and then I sold some Broadcom and Robinhood to free up some money to be able to buy Supermicro, Intel, and also add a little bit of cash reserve. And then we also got Cisco here. Cisco we bought after earnings last quarter, and so that's kind of flattish, but Dell has worked out well for us. And they report earnings I think tomorrow night, so we'll hear what they say. So this is one hot stock that we jumped on and has done as well. CoreWeave is a very volatile stock, and but we have it and we're profitable on that. And we got Facebook, which is kind of like more of a deadbeat stock these days, and we got Tesla. So that's kind of it. And here you can see recently I just bought the Cisco today, or sorry, not Cisco, Robinhood sold off, Broadcom sold off, and then we bought Intel and Supermicro here at the top. And yeah, we started this demo portfolio on May 12th, 2025, and it's been over a year since it's May 27th, 2026. We're up 55K, and we did this with a bunch of trades. For those people who are dialing in, we started with 100K, not using any margin, and yeah, we were able to get it really high, and it's fallen down from its peak late last year. And so yeah, we're still up. We're beating the S&P 500 over the course of the same period. The other thing I want to point out is given how the president does what he does, and hopefully this Iran war wraps up. But I would like to just keep some buying power on hand, or have. The other thing is you can have stocks that are more stable, like maybe you had like NVIDIA, which NVIDIA is kind of like dead money these days. It feels like it doesn't really go up despite like its great earnings. It's just one example. I'm not saying to use NVIDIA, but although it's pretty favorable if they keep their earnings growth. But yeah, I don't know about that. I mean, they definitely got a good future ahead of them in the next several years. Now, whether the stock will continue to at least like hold its position, it's hard to say. I hope it does at least and goes up, inches up. But yeah, so you can either have cash on hand, which is always is always there, or you can have like some steady stock, and then if you need it, you can just like sell it off and buy something else. But this is where we're at. We've got we got some cash on hand now, and yeah, we unloaded some stock. Robinhood wasn't so profitable for us, I believe. I have to take a look at a different view to check on that. At its peak, it was one of the darlings for this portfolio. Anyways, yeah, so we're doing good, and we got Intel and Supermicro, and if Supermicro dips, if there's a chance of that again, it's at 37, somewhere between 31 and 33. I think I would plow some more money into it. But again, it's got a track record issue. So there is risk with that. It's just like, yeah, all the other AI darling stocks, most of them are starting to get really expensive. Some of them have, and they're getting even more expensive. So yeah, just trying to spread it around a little bit and look for opportunities and deals, like everybody is, right? So it's hard to come by. You go wait like some wild stuff in the news, in the global news to give you a buying opportunity. And we always think like, oh, this is it, but those opportunities seem to be coming around, here and there, periodically, I would say. We haven't reached a state of like steady state, you can say. All right, well, anyways, I'm ranting on, but that's my update for this portfolio. And yeah, now we're into Intel and Supermicro. All right, don't forget to give it a like if you do, and I'll catch you next time.